Welcome to Markets Now. Michelle Rook along with DuWayne Bosse with Bolt Marketing, and a mostly higher day with the exception of a few of the soybean contracts. And let's start off talking about corn because kind of an impressive rebound there in the corn market after falling below the 100-day moving average last week. It looks like we're trying to get back above that level. What do you think prompted it? Was it corrective buying or was it weather or what?
I think it was both. Last week we went lower in this corn market because we saw this week's forecast, right? The extended forecast was hot and dry and figured there was going to be some good planting progress. Now, Sunday night, the weather models kind of switched to a little bit cooler and wetter for the western corn belt. And I wonder if that didn't start maybe the recovery rally a little bit. 20-day moving average held, so that maybe there's some technical buying as well. And then obviously USDA report tomorrow. Maybe a few shorts didn't want to be short going into that. So it all led for a nice recovery, but hey, up 10, I'll take that today in corn.
Yeah, so are you expecting that we are going to see a little bit tighter ending stocks here on the report tomorrow?
I'm leery. I hope we do, because the quarterly stock suggested that it's tighter than we anticipated. But I don't know, USDA could do one of those where they raise the feed usage 50 million bushels and lower exports another 50 million as well. We still have adequate supplies of old crop corn, but remember, we're still lower year over year, so it's still a tight situation. Basis is going to have to really do a lot of work, Michelle, moving forward to get the corn out of farmers' hands, because most contracts or elevators have moved from May out to July now with the inverse, and so the cash market dipped a little bit here last week.
Well, that's kind of the curious part, though. You look at the average trade guess, I think right around that 1.32 billion bushel mark, but the market with the cash basis doing what it's been doing almost feels tighter than that, doesn't it, DuWayne?
It absolutely does. You say 1.34 billion, and well, that's plenty of corn, and we shouldn't be maybe even above $6, right? And I don't know. It depends where you think pipeline is anymore. Is pipeline 1.7 because farmers hold so much now? It could be. And yeah, a lot of questions about what's still out there on farmers' hands. Remember that quarterly stocks report showed that most of it was still on farmers' hands and not in commercial storage. And remember, that's the hardest thing for USDA to predict is the amount of bushels on farm storage. And I don't blame them. It's pretty hard to get that out of any farmer. So it might be quite a bit tighter than we anticipate. The cash market sure says that, doesn't it?
Yeah, it does. So the corn market maybe got a little help from the rally in the wheat market. HRW, the leader, anticipation there, you think that we're going to see lower crop ratings or what?
Probably. I mean, the crop ratings aren't going to improve sharply, that's for sure. And, the wheat market's come so far off of the highs of the Ukraine war, the premium there, that I think we're making a pretty hard low, I'd say, in the wheat market. We don't really need to go low, but I mean, we are 40 cents off some of the lows too. So I guess wheat's wheat. It can do whatever it wants. But I think you're right. I don't look for crop ratings to improve this afternoon. It's still tough conditions. Can't catch a rain in a lot of the southern plains.
We're not expecting a whole lot of changes, I don't think, in the WASDE tomorrow for wheat, are we?
No, maybe a little bit lower export demand for us, and rightfully so. We're still expensive and our export pace is sluggish. So that shouldn't shock the market, shouldn't make it for a lower trade either.
Soybeans did come well off of their lows, but we're still under that $15 mark. So that is kind of serving as resistance right now?
I guess so. I kind of like the soybean market here today. Disappointed with it being about the only thing that was red on the day, but it closed fairly well. As far as tomorrow's report, I kind of look for it to be a bullish report for soybeans. The quarterly stocks were sharply lower than anticipated, which probably means last year's crop size was lower than anticipated. So the yield probably needs to be reduced there, but USDA won't do that in tomorrow's report. They'll wait till September to do that. So it'll probably be in the residual category that you could lose, anywhere between 10 and 25, 30 to 40 million bushels off the residual usage for now. That's going to make for a very tight ending stock. Almost might be a record short stocks to use ratio, which then kind of suggests to me that we can't export anymore. So if we get any more sales flashes like we had the end of last week, we probably should be above $15 for the old crop.
Cattle market, new contract highs again in live cattle, futures and deferred feeders again here today. And of course, we do have the record cash trade print. How much farther do you think we're going to go up here? Because I think most anticipated we were going to be at this level at some point, just maybe not now, and we're not even into the tightest numbers.
I know, and everything fundamentally suggests we need to go even higher, right? You've got record cash cattle trade, anywhere on that 174, 178 last week is what I was hearing. And here we are with the April board at 171 and a half and June at 163. So you can look at that and be like, oh, it just has to go higher. But the trade is never that easy, Michelle. And I'm starting to get a little bit nervous. it was an okay trade today. We stayed right near the highs, and it seemed like every time we dipped, there was a buyer in there, which could be the funds. The last 2 weeks, they've been aggressive buyers of the cattle market, but I am getting nervous. I don't think I want to be long or be a buyer up at these levels. It might keep right on going. Maybe we can get June above 170 before expiration. I could think that's a realistic goal, but right now in the short term, we're overbought, and it just makes me a little nervous, to be honest with you.
Yeah, maybe you'll see some hedge pressure up here or not, but the funds have actually got their long position pushed back higher again, haven't they? Or they extended it.
Yeah, they keep extending their longs here. And like I said, today, just watching the working orders felt to me like the funds were right under there and protecting their long positions, pushing it even a little bit further. But yeah, that's today. And, tomorrow, if something bad happens in the news wire, they may want to exit some of those. So it's just, you never know. We're definitely up at high levels here. It's fun. I'm just a little bit worried. I think I even got feedlot guys getting pretty cocky and bullish, and that makes me nervous because we're always the most bullish at the highs, right?
Yeah, that seems to be the case. All right, thanks for joining us. That is DuWayne Bosse with Bolt Marketing, and that's Markets Now.